I'm here with Joseph Cahoon, director of the Folsom Institute of Real Estate at SMU and the Cox School of Business in Dallas, Texas. Thanks for joining me today.
Thanks for having me.
Appreciate it. And we're just going to go through some questions about the Cox School, Folsom Institute, Dallas in general.
Okay.
Get your expertise in it. So first of all, what brought you to SMU from UT?
So it was the opportunity of a lifetime. I had been teaching at McCombs for 4 years. I'm a graduate of McCombs. My family had all gone to UT, but I actually was commuting from Dallas to go teach at McCombs. So traveling for 4 years. And I had a meeting with a couple of alums who said, "You're crazy. Why are you driving down to Austin? You should be helping us rebuild our program up here." And it's interesting. I grown up in Texas. I lived in Dallas for a number of years, but I really had no engagement with this university. Mm-hmm. I came over, I sat down with the then dean, Al Nemai, and it was just such an exciting conversation because he was so entrepreneurial, right? Like it was such a polar contrast from a major state university. He was like, okay, this school can be really nimble. This school can allow me to go do things in new and exciting ways. And coming at this as a practitioner, as a non-PhD, right, in a traditional academic environment, I would really be limited in what I could do. Here, I was able to leverage the best of what we have from my academic colleagues, and I can leverage the best of what we can gather from the industry all around us, and really do some interesting things. So it was just an opportunity to be entrepreneurial in real estate education.
You know, that's really fascinating because that's one thing I've noticed about SMU versus larger institutions, that you're very nimble. You get new ideas, and you can harness those and make changes to the school where bigger institutions can't. And it's interesting because you said you didn't come from an academic background. So talk about, you were doing underwriting and all kinds of acquisitions for private groups before your academic career. So talk about that.
Yeah. So my background, after finishing a master's in urban planning at UT, all I wanted to do was go work for a developer. And I interviewed with all these developers, and they're like, okay, well, you're really nice, but you don't know discounted cash flow. Well, one developer really took a liking to me, and they handed me a pair of construction boots, and they said, all right, let's go build some buildings. And so they stuck me in the construction trailer. So I actually learned the real estate business from the construction side. Built 2 large buildings in downtown Houston, and then went back to McCombs and got my MBA, came to Dallas, joined a firm called Champion Partners, underwriting empty office buildings around the country. But I still had this passion around development. And so when there was an opportunity to join the development team at Gables Residential, the multifamily developer, I leaped. And it was unbelievable. And then 2008 comes around, 2009 comes around, and everything slowed down. And so we all had to rethink what we were going to do for a few years. And so, it was timing kind of leads you in different ways. Jay Hartzell, our new president here at SMU, was my finance professor, was running the real estate program at McCombs. He asked if I wanted to just teach a class for a year. I said, gosh, that sounds great.
Yeah.
Well, no sooner than when I arrived in Austin did I meet the CEO of a tech company, Cirrus Logic. And Jason Rode was getting some advice around, should we build a building? Should we buy a building? And he was a semiconductor engineer. He didn't really have the experience to know how to handle real estate. And we built a rapport, and he said, hey, would you help me? And so next thing I know, I'm developing their corporate headquarters.
Oh, very good.
And so now I get to teach and work in the industry.
So when you say developing their corporate headquarters, were you going?
I was a fee developer. Yeah.
Okay.
So
from entitlements throughout the entire vertical.
Yeah. So we had a real lucky draw. 2010, right? Nothing's happening in downtown Austin. We actually bought the site fully entitled from Cypress Real Estate Advisors, had a 50% set of CDs already for a building. We modified it for a single tenant building. So it was don't want to say it was easy, but We had a really good attorney, Richard Suttle,
Yeah.
and we had a really good architect. We had a really good contractor, had a really good project manager for JLL, and we were able to pull it off.
That's great.
And it was a great opportunity for me.
So much want to dive into there. So 08, 09, you talked
Yeah.
about that. All right. Bottom of the entire global financial system, especially real estate. Nothing's happening, as you said. How do you relate that to right now what's happening? Because one thing I've been telling my investors is that multifamily values probably bottomed in Q4 of last year. Starts are down 75% in Texas. It's very hard to get anything out of the ground. Capital's fleeing, interest rates are high, debt's hard to underwrite right now. Can you relate at all what happened in 08, 09 to what's happening right now in multifamily?
We had a really different environment in 08, 09, right? You had low interest rates, low cap rates. Everything was underwritten to perfection. Today, you look at underwriting, yields are still significantly north of where they were in 2008, 2009. Rents have grown significantly. We've had such real rent growth in Texas. In migration, job growth. So the fundamentals have been much stronger even through this downturn. We have a cost of capital problem.
Yeah.
Right? That's really what we're faced with is a cost of capital problem. We don't really have as much of a fundamental problem. Certain markets have been overbuilt, right?
Sure.
Austin has been overbuilt.
Right.
But you look at the fundamentals of Austin going forward, right? That's going to get absorbed. Construction slowing down is actually probably a good thing.
Right.
Right? It allows the market to restabilize.
To absorb all that supply.
Exactly.
So would you say the fundamentals from a macro perspective for multifamily and construction are stronger now than they were in 09?
Oh, 100%. Just think about pros and cons, right? Texas is a very attractive place for people to come, but it's getting increasingly unaffordable. You look at the price of home ownership compared to renting, and there's still a significant premium with home ownership. So we are definitely leaning into more and more people that are going to need to rent out of necessity. Plus, you look at demographics around the state of Texas. You look at demographics overall, more young people, marrying later, household formation, coming later in life. They want to rent.
Yeah.
On top of that, they want that urban lifestyle. And so I do think that we are seeing a shift. It's interesting, at least here in Dallas, job cuts are nowhere near what they were back in 08 or 09, right? And I'm still seeing this, right? I live and breathe, students getting jobs every single day. And I do feel like throughout the past, year or 2 years, we've still seen steady job growth. The tech industry is they overhired in Austin, and that's really what we're seeing the pain of.
So if you look at the fundamentals are stronger now in multifamily.
Yeah.
But there's a cost of capital issue.
Yes.
There's a debt issue. There's cap rate expansion. When the multifamily recovery starts, which maybe it's already started, do you see that recovery happening faster than 08, 09 because of the fundamentals in place?
That's a great question. I personally think that it will. Just because of those underlying fundamentals. Now, the question is how quickly will the cost of capital change?
Right. What do you think is going to be the major factor driving that?
Oh, gosh.
Or major factor?
Certainty, right? That's been, we see so much volatility in the market today that I think it's hard for the market to make capital investment decisions to grow with certainty to propel the economy.
Yeah.
This will all play out. I feel extremely confident that, everything is we're not looking at a long-term shift.
Right. So as a former private underwriter and an academic now, and talking about volatility and stability, do you think this is a good time to be a limited partner and investing in equity when there's a lot of uncertainty in the institutional markets right now?
It all comes down to value, right? Can you buy right? Mm-hmm. Can you find the right locations if you're going to build? Can you have a long-term outlook? Right. I mean, I look at 2010, 11, there were a number of developers, one here in particular in Dallas that I know well, and they moved before everyone else, and they have a very long-term perspective, patient capital, and they did extremely well.
Okay.
Real estate is, I love, there's a group that I'm involved with, and of industry executives around the country. We meet annually. And one of our the sayings that came out of our last meeting was marry the real estate, date the debt. And I think that's a real true statement today, is like, find good real estate.
Yeah.
Marry it, date the debt.
Yeah.
But you're going to be married for a long time, right? Like this isn't a quickie marriage.
Right. Exactly. So the key for LP investors would be find the right deal and be patient with it.
Yeah. I mean, think about it. You look, you make money in real estate in two ways. I've told this to your daughter many, many times in class, right? You make money through cash flow and you make money through appreciation. Mm-hmm. Well, we're in a period where we're not going to make as much money from cash flow for the time being, but there is residual value. It's going to take us a while to get to that residual value, but I think if you can be patient with it, and again, if you buy right, I think there's a real opportunity when you can capture those significant rent growth.
Okay. So we're still on the first question, but I mean, your answer just brought up so many more questions for me to ask. I mean, so I want to go back to the nimbleness of SMU.
Yeah.
Which I think is a huge factor. And I mean, that's what I talk about with my company, right? We're a boutique private equity company, but we can be so nimble and adapt to changing circumstances. So from SMU's perspective, being so nimble, being smaller, being private, what have you seen in terms of the growth of the real estate school and the Cox School in the past, say, 5 years or so?
Oh my gosh. I'm a kid in a real estate candy store.
Yeah.
I mean, okay, so there's a lot of different factors. Number one, just look at the growth in the commercial real estate industry here in Dallas. Look at the firms that have opened offices here in Dallas. Having access to those firms, being able to engage with those firms for our students, it's unbelievable. Number two, I mean, this was the biggest thing for me when I came to SMU. The real estate program had done very little outreach to the industry. We've had one longtime adjunct, and he is a legend around this campus, Chuck Danis. And Chuck, this was not his day job being a professor, right? Like, he just did this as an adjunct. He's been here for decades. And he was the sole person that was truly just reaching out to the industry all the time and engaging it. So when I came here in 2014, I mean, that was my first move, is reaching out and engaging. And the alumni, not only here in Dallas, but around the country, parents around the country, no one had asked them to be involved before. And in a relationship-based industry, right, doesn't take a rocket scientist to know that that's how you're going to be successful. Yeah. So you've got this combination of extremely deep alumni and parent base. You have a fantastic growth in our industry here in Dallas. And I'm leveraging both of those.
So let's double click on that. So as far as relationships with the industry here, Dallas is the second biggest financial hub in the country now and growing, right? Number one real estate market in the country. So since you've come here, how has that relationship with local industry changed, in that how are industries viewing the students graduating from here, both from the bachelor's and from the MBA programs, since you've come here?
Oh, I mean, I think you could go out and talk to any firm here in Dallas, and the number of hires from SMU in the past 5 years has grown exponentially. And it's because we are truly blending the best of the academic program here at SMU Cox with the best knowledge coming out of the industry. So we can, there's a big focus on applied learning. Well, what are we doing? We're teaching an applied asset class, right? Real estate is the ultimate experiential asset class. And so by giving our students the best fundamentals of business education, tying that together with training, both in terms of their technical skills and their soft skills, we want to make them employer ready. And look, if we can deliver good talent to the market, well, then that only begets more and more people coming back and seeking more talent, right? Like I like to joke with my students that I'm a little bit like the Godfather, right? Like I'm gonna send them out there, and then I'm gonna help them, and then one day I'm gonna call them, when I need their help, right? Like, and that's what we're doing. Like we're calling them back, and they're helping our program. You look at the young alumni. Frankly, that's how we've become so successful, is because I've invested in those young alums. In their time here, and then you start to see this cycle grow. Young alums helping other young alums, coming back, wanting to get back involved, creating excitement.
And are the alumni, both from the bachelor's and the master's programs, going all over the country, or most of them staying in North Texas and Texas?
So our undergraduate students are definitely, probably. In all cases, the majority want to stay here in Texas just because the job market is so good here in Texas. But we have such a strong alumni base in Southern California and Northern California. A lot of students are going back out to California. We've really been growing our alumni base in New York. We've always had a strong base in Atlanta, Chicago. We're growing it in South Florida.
Okay.
So our undergraduate students are probably going out of state more than our grad students. Our grad students come to SMU because they want to be here in Texas.
You kind of already answered this, but just go into it as far as the future. How do you and your colleagues see the growth of Folsom Institute in the next, say, 5 to 10 years? There's already a great trajectory. You're in almost the perfect place for it. But what are the items in place right now to keep this growth going and even actually accelerate it?
We've been extremely happy that now that we have been able to add a third academic program, right? So we've always had our undergraduate program and our MBA program. This past year, as I told you, we've added our MS program in real estate. And we were thrilled that the first year we had 46 students in that first cohort. We were anticipating 20. We've already got 35.
So to be clear, this is a bachelor's in real estate?
No, this is a master's. This is a 1-year master's of science in real estate.
Okay.
So our only competitive program, say, at Texas is Texas A&M. Okay. We're competing with the MEd program at USC. We're competing with the MSRE program at NYU. Those are my aspirational peers, right? And I want to be that regional program here in Texas. And so, like I said, we have 46 students in our first cohort. We've already have 35 deposits, and we're not through with the application process. So continuing to grow that program is a really important thing for us. It benefits our MBA programs because it's enabled us to add courses at the grad level. Now undergrads are asking for those courses as well. And so, I think that's the next step for us is building out more courses at the undergraduate level, which just requires me to hire both full-time academics as well as adjuncts.
So that you've got my next question already. So with this growth and the teaching involved in it, it's going to be a combination of both academics and people in the industry volunteering their time.
Well, and then you get the lightning in a bottle with our newest hire, Maria Stamolis. So Maria moved to Dallas, I think probably 5-6 years ago. She was at the time the co-head of real estate for Canyon. And they fell in love with Dallas. She wanted to be an adjunct professor. At the time, we were launching our real estate impact investment fund. So she came in, started teaching that course, our real estate practicum, with me. After leaving Canyon, she joined Lincoln Property Company as their CIO. And in January of this year, she joined us full time as a professor. So you have an industry leader. She has had 30 plus years of real estate private equity experience. She took over our undergraduate real estate finance course. She has turned it into just a powerhouse course.
That's fantastic.
Those students and what they are able to do just within a one semester period of time, like she is increasing their technical skills tenfold. So if I can continue to find, again, Maria's lightning in a bottle.
Yeah.
But, you want to be able to tap not, industry professionals who want to teach full time, industry professionals who want to teach on a part-time basis, but then, finding other real estate academics like Wally Boudry, my colleague that came out of Cornell, who he is, I guess, almost lightning in a bottle as well, because he has such a great background as a finance academic, but he has such a passion for the real estate industry, and he's been able to blend both in his research.
So, we talked about, you mentioned Cornell, NYU, some other universities. And my thought has been, ever since my daughters came here and I've become more and more involved with SMU and just really enjoyed everything happening here, is I truly think that SMU is the Ivy of the South, and I almost hate saying that, because that means that you're framing it as an Ivy League, which, whatever you want to think about that, right? How do you see us, SMU, being launched into the upper echelon of finance, business, real estate, compared to, well, I want to go to Hopkins, I want to go to Harvard, I want to go to UPenn, I want to go to Wharton, and then students saying, well, I want to go to SMU?
Well, so there's then this incredible confluence of factors. So number one, Gerald Turner.
Yeah.
You've had a president that has transformed a university, and he's done it because he's done it patiently. He's been here 30 years. That's unprecedented among university presidents. His thumbprint on this university is just so impactful. And he has been just a master at gathering resources, a master at fostering collaboration. And then you fast forward just to the two most recent transformations, right? Joining the ACC. Mm-hmm. You look at our peers now in that conference, Duke, Stanford, UVA. These are schools that are just so exciting to be in the same conference with, be affiliated.
We have a better football team than them too.
Absolutely. And we will have a better basketball team at some point.
Okay, I'm ready.
And then now achieving R1 status. Now, let's take those three things, add Dallas to it. When you look at all of these other universities, they tend to be in college towns, tend to be a little bit more divorced from industry, mm-hmm. right? Here you have a university that's sitting in the middle of one of the greatest economic generators in the country.
Right.
And you can use this entire city as your laboratory. So you have the confluence of all of these things, R1 status, ACC. Now we have my old colleague, Jay Hartzell, coming to be our new president. Right. And I'm so excited about what he's going to be able to bring to us. So there's so many things. I tell everybody, I've always been honored to work at this institution. Like, I truly have been honored to have the opportunity to work at SMU. I've never been more excited than I am today.
Great.
To work here.
Yeah, and that's interesting you said the insular nature of a lot of these academic centers, and that they are in a college town. They don't have that connection to industry. And so you can learn a lot of theory there. But I think we're more and more in an era of practice-based learning. As in, yes, I can learn what a cap table is. I can learn what a discounted cash flow is. I can learn what an underwriting model is. But let's go apply it.
Mm-hmm.
And that's what I've seen lacking in a lot of my friends who are more academic. And, I won't say what university or what town, but they'll say, yeah, I teach management courses all over the country. And I said, well, have you ever run a business? We'll say, well, no. Have you ever managed people? Well, no. Have you ever been in a crisis situation where interest rates go up 300 basis points in the course of a year? Well, no. Well, how are you teaching people how to adapt to that if you never had to do it yourself?
Mm-hmm.
So it sounds like, I don't know what words you're about, it sounds like what you're saying is that you've blended that over here. You have the academic rigor, where they actually have to learn the technical stuff. Then it's like, all right, volatile period for the past 2 years or so. Go out and learn how to adapt to that. Is that accurate?
No, I do think it's accurate. And look, we have a benefit. Our research faculty here at Cox, I put up against any research faculty across the country. They are fantastic. They also have the opportunity to leverage industry for their research. That's the nature of our business, right? Literally, we're a business school.
Right.
So the academic rigor is key. The research is key. Frankly, the fact that we don't have a PhD program here at Cox means that our best faculty are in the classroom.
Right.
They are all teaching faculty, undergraduate and graduate. And I think that you don't see that at a lot of other institutions. We don't have a PhD student teaching a section, right? It is all of our best faculty teaching every course.
That's fair.
And I think that's a real advantage for our students. But it's, the other thing I would tell you, again, this institution, and I hear this from from my colleagues in the faculty, it's an extremely collegial school. Among the faculty, there truly is a desire to work together for the betterment of our students. The opportunity for us to get to know our students, to engage with those students, to foster their growth.
Yeah. You involve parents also.
We do, heavily.
I have a lot of friends who have kids at larger universities, and they're amazed at the amount of parent involvement there is over here. Say, you guys actually help drive decisions over here? It's like, yeah, we do. And I'll say, one point that's very close to my heart is free speech on campus and critical thinking, which I remember when I met Dr. Turner, when we first started Parent Leadership Council, my first question to him, my only question, the most important question was, there's an election coming up, all right, 2024 elections coming up. What's going to be the status of SMU for free speech? And he said, everyone gets to talk on this campus,
sure,
but no one gets to yell, okay? And I think that part of SMU, just zooming out from the business school, is incredibly important for a university.
Mm-hmm.
And that takes me back to when I was in college, when vigorous debates back then, it's a long time ago, right? But the debate still happened. And so are you seeing that also as something separating SMU from, say, the Ivies, in that free speech plus all the academic rigor plus the industrial connections?
Discourse. You hit the key word, though, discourse. Discourse is discussion. It is respect for the other party. Right. And I think that's a key element here on this campus is mutual respect. I talk about the Mutual Respect Society all the time in my class.
Okay. And I think, that can very much relate to our industry, real estate.
Yeah.
In that you have a lot of butting heads, a lot of strong personalities. How do you get through those vigorous discussions, not over negotiate to the point where you're really making another person mad? You may get the deal done and your lawyers may paper it over, but they're never going to deal with you again.
Right. As I say, there's a huge difference between doing a transaction and building a relationship.
Mm-hmm.
The key to, I think, success is repeat business, right? Repeat relationships. Right. We all want to do business with people that we like and that we trust.
Yeah.
So sure. I agree.
So, do you see, and this is one thing I've been not harping on, but really been a big advocate for since my daughter started here, is how do we get SMU to be one of those paragon schools in the country that people think about? Because say Harvard, Hopkins, UPenn, those all come easily to people's minds. I want SMU to be there. What is a path to make that happen? Besides everything you've already talked about, is there other stuff?
I mean, I think it is happening. I think that the fact that you're running into people in New York City, the fact that you're going to, you see the alumni and parents in the Bay Area, in Los Angeles. I think that people are already looking at us that way. Maybe it doesn't show up in the U.S. News and World Report rankings yet. We can go on about those rankings.
Yeah.
But I do think that you're already going to see it. I mean, the ACC, while we all love it for sports, it's just affiliations as well.
Absolutely.
And I think that that's really going to be a big game changer for us.
Okay. Great. All right, let's go into Dallas.
Yeah.
So you've already talked about some of this. Broad thoughts. We can go as granular as we need to on the DFW and North Texas market, specifically real estate. How has it grown since you've been there since 2014? Where do you see it going?
Oh my gosh. Dallas is undergone just a tremendous transformation. So I moved to Dallas in 2005, right? Teaching here since 2014, just the level of immigration, and not just from across the state of Texas, but from around the country. Mm-hmm. I love the fact that when people from Goldman in New York move to Dallas and they say, what have I been waiting for, right? Like I can actually go to my kid's soccer game. I can go to the grocery store and enjoy myself. And I mean, the quality of life here has just been so high. And I think for a lot of these large financial services firms and real estate private equity firms, I mean, they've been welcomed here. They feel everyone there's not a been here, come here type of mentality. I think that it has been a very welcoming city.
Okay. And so trajectory.
Yeah.
What are your thoughts? Slowing down, not slowing down, speeding up?
I mean, so the thing I love about Dallas, I did this a number of years ago. So I went to the BLS data and just built a pie chart, basically, of like industry clusters, across the U.S. and did the same pie chart for Dallas. They're basically the same.
Okay.
Right? Like Dallas is diversified today.
Right.
It wasn't once upon a time.
There's oil and gas once upon a time, right?
Yeah. But and telecom for a number of years and others, but like it is diversified today. I love seeing the growth in boring industry. Boring is stable.
Yeah.
You look at for the Goldman Sachses of the world that are concentrating efforts here, they're small companies moving here. I mean, it is, compared to a number of other places around the country, still relatively affordable. Mm-hmm. It's getting, increasingly more expensive.
Not cheap.
It's not cheap, but relatively affordable compared to the coast.
Well, you go out to say Plano, Addison, Frisco, McKinney. Those other places are very much affordable still.
Reasonably. And I mean, what's nice is you've seen the growth. We really have a kind of a multinodal business community today with the growth in Legacy West. You see the growth in McKinney and Allen. So, companies don't have to be necessarily in downtown Dallas as much as I want them to be in downtown Dallas. I want the growth in the core of this city. The opportunities in the southern sector, right? I mean, we have it's an enormous side of the city that has been underinvested in, and I think that there's a huge opportunity to see transformation there.
Well, who knew Waxahachie would attracting major corporations?
Yeah.
I forgot exactly who, but there's some major corporations setting up shop in Waxahachie. Yeah. So I like that term multinodal. I'm going to use that.
Okay.
All right. So DFW residential real estate. I think there was a overbuilding that happened throughout Texas, more so in Austin than in Dallas. It seems like that is stabilizing now. Supply is dropping off. Absorption is really picking up. Your broad thoughts on residential real estate in the DFW Metroplex the past year, and what do you think is going to happen over the next, 3 years or so?
Sure. Look, Class A multifamily rent growth has slowed. It's going to take some time to see real rent growth again. Incomes have not kept pace with rent growth, and so now there has to be a stabilization that has to happen there. I think the value add multifamily game is getting much tougher. Much tougher. You have to be so operationally focused. And I think that a lot of the value add operators didn't have that operational focus. I think there are groups today that have really succeeded because they do have that. But you still have a very soft rent growth. I'm not saying that right. Rent is not growing very much. Okay. Rents aren't. And so,
well, do you see that, say, let's fast forward 3 years from now?
That'll stabilize.
Yeah. So we can reasonably expect a supply crunch.
I think, again, a little bit more certainty in the market. I predict the next 12 to 24 months, we're back to a normalized market. I mean, like we got spoiled by, high single digit, and in some cases, double digit, rent growth. Oh, yeah. That's not normal.
Austin was 19%.
Yeah. I mean, that's not normal. Right. Trees don't grow. No, it is not good. So can you get back to 3, 4, 5% growth? Yeah, absolutely.
Okay.
Can you make smart operational moves to achieve alpha? Absolutely.
So you talked about value add.
Yeah.
So let's talk about value add versus, let's say, Class A. Class A value add versus Class A new development. If you're an LP investor right now, where would you put your money? Say both great projects, great operators, very experienced. You have cash flowing value add you can invest in today, right? The upside may not be as high, but it's a stabilized property. Or you can invest in a new Class A development with a great builder who there's risk along the way, but potential higher upside. You have $100,000, where would you put it today?
So I'm gonna play it a little. I'm going to answer in 2 different ways. Okay. So number one, I'm still a believer in great real estate, great locations. And so whether that is ground up construction or that is value add, I go location, location, location. Okay. On the flip side of it, I think that, I would rather be in Class A multifamily in the core than Class A minus multifamily in the suburbs that is stick built, that is probably going to, be functionally obsolete, have some functional obsolescence in the next decade, right? You don't want to be in the value add space in Salina in 10 years.
Okay.
I do think that there's an opportunity to provide better quality single family rentals, particularly at the lower in the lower income segment of the population. I think that there's some real returns that can be achieved there if you can provide a quality product.
So you think affordable new development SFR will be a good play right now?
I think so, and it could be it's probably renovation.
Okay, so that's interesting. So location number one.
Oh yeah.
And so if we're going to go outside the core markets, say to the outlying suburbs, say, Rowlett, Garland, Salina, which you mentioned, if it's a good location, you'd much rather do new development out there than value add.
Yeah, I mean, look, you've seen the starter home equivalent of multifamily built in a lot of those markets. Yeah. Is it really necessarily durable product? Is it going to get dated pretty quickly? If you can find that right location, the growth is in those markets.
Yeah.
They are becoming increasingly urban. I look at downtown Garland. I don't know if you've been there.
Yeah.
It's cool.
Yeah. Yeah.
It's really good. Downtown Mansfield, it's really cool. There's some really interesting things happening in a lot of these suburban markets that
we have a workforce housing investment walkable to downtown Garland.
Oh,
And when I went to go check on it, this is Garland?
yeah.
This is actually a pretty nice place to hang out.
Oh, yeah. No. And that's what excites me. It's not all brand new construction, but they really are capturing some of these classic, suburbs and really kind of urbanizing them.
Let's talk about that. So what are your favorite, outside the core markets, what are your favorite submarkets in Dallas? I know it's a big question, but
it is a big question.
if you say, I'm going to Flower Mound, Farmers Branch, you don't have to say those, but what are your favorite markets that you see as very much up and coming, great place to put an investment in right now, which will probably return significant returns in about 5-6 years or so?
Well, I'm still always a big fan of what's been happening in the Knox Henderson area. Right? Like I think that's a market that still has a lot of older product that's going to get turned over. Mm-hmm. I'm a big fan, like you mentioned, the Flower Mound Farmers Branch area. I mean, I think that there are things happening out there. I'm a bigger fan of places like Garland. I'm a bigger fan of places like Mansfield. Okay. Places like McKinney, places that have character, that have accessibility to employers. I think that there's, again, place. People want to have a sense of place. And I think if you can find those locations, that's what I'm more attracted to.
So a location that has its own feel, not that it's just a suburb of Dallas.
Yeah.
Accessibility to highways.
Yeah.
Not necessarily betting on the come that North Texas is going to keep on growing. So like, would you go to somewhere like Sherman, which has some big facts going out there?
All right. So Sherman's an interesting one, right? Today, maybe not. And here's the reason why not. Because who's going to buy it from me?
Yeah.
I mean, that's my issue is I do like the fundamentals in Sherman, but I don't see capital flowing there to buy, well, they may buy ground up new product there.
Right.
I wouldn't do a value add in Sherman.
And that comes back to your thesis of value add without the good operator is going to be difficult. It could be obsolete in about 10 years. And so if you're going to go further and further out, if you're going to invest, big if, then ground up development's the best way to go.
Yeah.
Okay. Gotcha. Let's see. I went through a lot. Oh, here's a fun one.
Okay.
Texas Stock Exchange. What are your thoughts?
Oh God, you asked me. I don't really have good thoughts on the Texas Stock Exchange. I mean, I just think it's you're seeing it. I think it's going to be successful because of the reaction around the business environment. I mean, I just think that there's the business environment here in Texas compared to New York is such that companies want to make a statement.
And it's funny and interesting. There's so much interplay now because you have NASDAQ setting up the headquarters here. You have Chicago Stock Exchange now being Texas Stock Exchange. You have a significant rivalry now.
Yeah.
Do you have any sense of how that might play out over the next couple of years or so? Do you think they're all going to have their part of the sandbox?
Probably.
Yeah. You see the Texas Stock Exchanges playing with the big boys.
I mean, you look at the capital that's behind it.
Yeah.
It is not fly-by-night capital.
Right. And part of my question is that, is it a hobby for the billionaires to do
I mean,
this?
I don't think, when I look at the billionaires who are behind it, this is not a hobby for them.
So they want to see it grow. So
absolutely,
again, just adds to the whole mystique and aura of the Texas miracle that it's not even close to being done.
No.
So you're expert in Dallas, you're expert in Austin. Any other markets in Texas?
Houston. Don't forget about Houston.
If you didn't say it, I was going to say it. So
don't forget about Houston. I mean, Houston, if oil and gas is not going anywhere, right? $60, $70 barrel oil. I think that Houston is a great market. The medical center is just an incredible. Houston is an international city. It didn't see as much development. Right. I think it's a fantastic city. I love it there. I tell you the other city I love is San Antonio.
Yep.
San Antonio is one of those cities I think I'm still a little perplexed why it hasn't grown as much as it has, because I mean, look, you got fantastic infrastructure, you have amazing culture, you have great quality of life, affordable living, a great workforce, military, like the airport's fantastic. Like there's so much going for it. I mean, what they were able to do around the Pearl prove that you can deliver a high quality luxury product and find a renter there,
Right.
find a tenant. So I'm a big believer in San Antonio as well.
It is a curious question why it hasn't. And I wonder if there is the sucking sound of Austin
Yeah, probably.
taking that.
Yeah, sure.
You know? And as Austin has become less affordable, I think I read a stat that most people who decide not to move to Austin move to San Antonio.
Yeah.
You know, so yeah, you know, we have investments there. I'm hoping to see that area grow quite a bit. I think Toyota's setting up a huge corporation plant over there. Oracle is doing stuff there. Microsoft's doing stuff there. So I agree. So outside the Texas Triangle, but still in Texas, are there any markets that you like?
Well, El Paso, I still think is a great market. I mean, you look at the long-term border traffic that will happen there, you know, military, et cetera. Like it's the UTEP. It's a great city. The downtown El Paso is fantastic.
Yeah.
I've always been a big believer in El Paso. I love Fort Worth. Fort Worth is kind of like San Antonio.
Yeah.
It should be hopping way more than it is.
Yeah. It's a great city, one of the fastest growing in the country.
It is.
And even as a rabid SMU fan, you know, I can say it's still a great city.
It is a great city. And there's a lot happening there. So, I mean, those are really the markets that I
But it's still the Triangle plus maybe El Paso
Yeah,
is where the action is going to be. Yeah. I agree with that. Oh, one not on my list here, but this is the number one question I get from my investors now. What about tariffs? And my answer has been, no one really knows right now.
No one knows.
And has that been your answer to your students?
Absolutely.
That you
I ask everyone else that same question.
Right.
No one knows the answer.
Because you can't underwrite that right now.
You cannot underwrite it.
So if you had to say you were underwriting a new Class A wrap product, 300 units, shovel go on the ground in a month or so. All right. Your GMP is still not in place. How would you underwrite the potential impact of tariffs? Would you underwrite a bigger cushion in there?
100%.
Okay. What would that cushion be, you think?
I mean, multifamily, that's where we're going to get hit the most. I mean, in fact, if you're bringing your cabinets from China, if you're bringing, if it's stick built, you're bringing Canadian wood, you know, so on the one hand, materials are going to be going up. Labor's going to get squeezed. So maybe we're net. I don't know.
Okay. But if you were underwriting it, would you put a contingency of say 3% in there for those kinds of unknowns?
God. More.
Okay.
Right. That's the beauty of contingency.
Yeah. You can make it whatever you want to.
Yeah.
So
I would rather have a high contingency and you know, be able to deliver it back.
would you ask that the GC in the negotiations absorb any potential impacts of the tariffs? Or would they be more of a collaboration that, look, as a GP, we'll take on some of that?
Well, look, if you put it all on your GC, you know you're going to still pay for it.
Even with the GMP?
It's going to come back on you, right? Like there's going to be, whether it's a change order, whether it's unforeseen circumstances, right? Like you're setting up a relationship and getting a GC to, I mean, they're really going to pad that GMP to cover themselves.
Yeah, so they'll put their contingency.
They're going to put their contingency on it. They're going to, you're setting up a relationship. I think that if you could be more aligned, if you could set up opportunities where you could both win and both save over the long run, I think you may, that's probably a better approach.
So then back to the value add versus development discussion. So if most of the risk is in potential risk of tariffs and inflation, or mostly in new development, would you hedge a portfolio? This is what I've been doing. I've been hedging my portfolio with more value add.
Depends. Is it light value add?
Is what now?
Is it light value add?
Yeah, I mean the capex won't be much. I mean, so we have one deal in Tampa, very light value add needed, and we have the student housing in San Marcos, and those are in my new fund. And the question I get from investors is that I thought you mostly invest in development. I was like, we do. We have quite a bit, but now with this uncertainty in place, we're going to do a bit more value add, light value add, just to make sure. I mean, is that something you would advise a client to do right now, or would you still say development in core markets is the better bet?
Well, again, I lean in on value add that you cannot just improve units and achieve rent growth. You have to have operational expertise.
Okay.
So yeah, I
So
like
great operator. It makes sense.
great operator.
Okay.
I mean, asset managers are worth their weight in gold right now.
Okay. Very good. Good to know. Two quick questions. Advice for people, whether it be students or operators or private equity people who are nervous about residential real estate right now because of one, interest rates may not come down as fast as they wanted to. Cost capital is still high. Tariff issue looming. What's your advice? As from a long-term perspective to folks who are thinking about investing in real estate right now, they're nervous.
Conservative underwriting, finding ways to create better alignment of interest, and be willing to pause.
So be
Right, like
wait.
it's we're in real estate. We want to do the deal.
Yeah.
Find a good partner. And you might have to push pause, right? Like if you do, we did this within our own fund. We have a new investment in our student managed fund. We totally believe in the sponsor. We believe in his business plan. We're so excited about it. But we're going to push pause because we don't see the rent growth that we want to have to move forward. And it's not, it's we want our sponsor to be successful.
Mm-hmm.
And as much as, when it's your deal, you want to get going, you want to do the deal. And sometimes it's better to just have that relationship and be ready.
Do you think there is an argument, if it's a good deal with the right sponsor in a core market, for getting in now before the institutions all come rushing back in the next 12 to 18 months or so?
Depends on when you're delivering.
Say delivery starting, say, Q4 of last year or Q1 of this year and delivering in 2.5 years.
2.5 years, okay. I feel okay about that.
Yeah, okay. And do you think that there may actually be an advantage to going in right now?
Yeah, I mean, if you're going to deliver mid-27, yeah.
Okay, all right. Final question. Will the Mustangs make the playoffs again this year?
Oh, heck yeah.
Okay. Where will they be ranked? Follow-up question. Where will they be ranked compared to UT? Oh boy, I'm putting you on the spot now, huh?
You're putting me on the spot. I mean, I think UT is going to be an absolute top contender this year. I mean, Arch Manning,
right?
He's incredible. Can SMU be a top 10 team? It's possible.
All right. Okay. I'll see you at the
All
games.
right.